up, Crypto Warriors? It's Sergeant Crypto back at it again. It's Saturday, the 20th of March, 2021. We have a little recovery right now over the past hour or so. Everything, even by the charts, is still pretty much red. But yeah, we're starting to recover slowly but surely. Hopefully we could break through that 60K resistance. And how over the past 24 hours, top 10 coins in the green or trading sideways in the green pretty much so far. All right, let's have a quick look at Bitcoin. I'll show you what I mean by the hit us not being able to break through that 60K resistance. So we broke through it, but it didn't last. And then, I guess the bears took over and pushed it back down to that 59K level. So we'll see what happens over this 24, 48 hour period during the weekend. All right, let's get right into it. Coming from Decrypt today, Coinbase to go public next month reports. Crypto exchange Coinbase will go public a month later than expected, according to reports. And it's because the company's been facing regulatory scrutiny relating to wash trading, among other allegations. Coinbase, the major U.S. crypto exchange, valued at $68 billion, will go public a month later than expected, as its plans to expedite the process have slipped, according to anonymous sources cited by Bloomberg. Now, what was happening is, or was, just earlier this month, Coinbase was valued at $100 billion on the private markets. It was trading their shares at $100 billion valuation, and even went up to 100, I think between 110 and 120 billion dollars. So that's a big drop. That's a big drop of, what's that, 30, almost almost 50%. Okay, that's almost a 50% drop from 120 all the way down to 68. So, and that's because they're facing a lot of regulatory issues, which I will get into in the next story, which explains it a little bit better. All right, Coinbase fined $6.5 million over trading irregularities. $6.5 million settlement with the CFTC, not the SEC this time, the CFTC, related to Coinbase's trading software. The announcement did not discuss other investigations related to Ethereum and Bitcoin Cash that may be ongoing. So they could still be facing more scrutiny for that whole Bitcoin Cash situation back in 2017, when the Bitcoin Cash forked from Bitcoin, and a lot of insiders were able to pump the price, or they pumped the price up of Bitcoin Cash because it went up to like 4K at one point. So for every Bitcoin that you own, you got a free $4,000, and people were selling it at those all-time highs. All right, a lot of people dumped it on the market at those all-time highs. And also, at the same time, Coinbase customers, now, so these were the insiders at Coinbase that were selling it, but Coinbase customers, they didn't get their Bitcoin Cash fork. They didn't get the fork from the original Bitcoin. So they had to go through litigation and stuff like for pretty much, I think, all of 2018, and they finally got it late 2018. And yeah, so if I remember correctly, but the CFTC fined Coinbase over activities related to its in-house trading softwares. The agency also alleged a former employee had engaged in wash trading related to Coinbase, the Litecoin. So it had to do with their trading software on their old platform called GDAX, which is now Coinbase Pro. And the CFTC alleges that in some instances, those software programs effectively traded with each other, which may have served to artificially inflate prices and trading volumes on the GDAX platform. They're talking about two in-house softwares. The two softwares were known as Hedger and Replicator. And the two softwares, right, these two computer programs were trading against each other. They were trading with each other automatically by themselves, or, artificially pushing the price up of these coins. And that's why they're getting fined for that, okay? Meanwhile, CFTC also alleges that one of Coinbase's former employees had engaged in so-called wash trading, an illegal activity that involves an entity trading with itself in order to convey an artificial high degree of liquidity in a given market. The agency accused the employee of intentionally placing buy and sell orders in the Litecoin Bitcoin trade pair on GDAX that match each other as wash trades. Now let me adjust the screen a little bit. Sunlight's coming in and kind of blinding me, but we're seeing them accuse a so-called employee, and they're saying that it could be Charlie Lee, because he used to work for Coinbase back then, and being a creator of Litecoin, pumped it by doing wash trading. But Coinbase should also be under investigation for not only the wash trading and the artificial pumping of these prices on their platforms, but also the shutting down and locking people out of their platform when the prices either pump or dumps and people can't get in to execute trades. Coinbase need to pay for that as well, and that may also be an investigation that's ongoing as well. So we'll see. They may have to push back that them going public even a month longer if they don't take care of these allegations and all these fines that they have to pay. So we'll see if they end up going public. And this just also goes to the fact that this may be, the old boys club trying to squeeze Coinbase out from going public. All right, because they don't want a new player like Coinbase, which will eventually become, a bank and get a bank charter and things of that nature, in this new digital paradigm, this new shift that we're seeing to everything going digital. And this could be a play from the old guards, so to speak, that's trying to keep them out. All right, find everything dirty on them and prevent them from going public. Let's make it as painful as possible, because they're also not going public through the traditional route, through the road shows and going and getting the banks involved and things of that nature. They're doing a direct listing. So yeah, this also could be a slap in the face from the old guards as well. So we'll see how it plays out, man. We'll see how it plays out. Next, and last but not least, Anthony Scaramucci, SKyBridge applies for Bitcoin ETF. Now, he had ties to the Trump administration, and he could possibly get a Bitcoin ETF going because of his ties in the government and things of that nature. So here it is: SKyBridge Capital hedge fund. Let me see. This SKyBridge Capital, the hedge fund of former White House Communications Director Anthony Scaramucci, has filed for a Bitcoin ETF with the SEC. If successful, the SKyBridge Capital Bitcoin ETF could eat away at the appeal of the SKyBridge Capital Bitcoin Fund, which grew to a size of $370 million within weeks of its January 2021 open. The Bitcoin Fund, SKyBridge Bitcoin Fund, is for accredited investors able to contribute at least $50K, allows for shares to be redeemed on a quarterly basis. An ETF or exchange traded fund would be far more democratic. And yes, it would be far more democratic, and anyone would be able to pick these Bitcoin ETF up through their local brokerages. And if it's a Bitcoin ETF, the Robinhooders are going to be getting in on it and things of that nature. But what we're seeing is, again, a traditional player trying to get an ETF going. All right, and I think that the likes of a SKyBridge, the likes of an NY Dig, right, they will be able to probably get an ETF pushed through and get approved before the Gemini twins or the Winklevoss twins or even Coinbase or the folks over there at Ledger that try to get their ETF approved. So again, the traditional space squeezing out the newcomers, the new guys on the block, and preventing them from getting in to participate or to innovate, because they have all the ties. They know each other from going to school with the guys that work at the SECs and the CFTC and all that other stuff. So again, we may see this guy here get his ETF pushed through, which will be beneficial to him. And if it gets pushed through, it's because he knew the right connections. So let's discuss it in the comment section below. Smash that like, hit that subscribe button and notification bell, and let's discuss it again. And it's Ultra Crypto, and I'm out. Peace.